With markets crashing worldwide and economic warning signs flashing red, the situation is dire. Is the next Great Recession just around the corner? What does the recent stock market suggest?
So, Claudia, squaring that then with what you answered to Maddie's question, the chances here that we could see a recession in the next 3 to 6 months. I guess what would you place those odds at now? And when we talk about maybe the likelihood here, what would make you even more concerned? Clearly, it would be if the unemployment rate increases, that sort of thing. But is there anything else maybe outside of those metrics that you're closely watching that would be a bit worrisome here for the economy?
Okay, so the odds of a recession are elevated in the next 3, particularly 6 months or so. It's not my base case. The reason that I see a path out of this, that's a good path, is we do have, and particularly the Federal Reserve, has some important policy levers that it can still pull in terms of gradually lowering interest rates. We have a really healthy economy. We're just pointed not in a good direction. So just take a little bit of pressure off, or as much pressure off as they need to, and we can get this back to more of a glide path. The problem is not where the U.S. labor market is right now. Close to 4% unemployment is good. We've had a lot of increase in the labor force. We need to stay in this place. If we get month of this weakening, that's the problem. And I think the policymakers, there are some tools to help smooth that out, and they're pointed in the direction of doing that.
If we look at the global scenario, especially the Japanese stock market, it is at the center of this storm facing significant losses.
Now, we spoke to Honda Hirokuni of Tokyo University about the Tokyo stock market's plunge on Monday. He explains why concerns about a U.S. economic recession have such a big impact on Japanese stocks.
Stock markets in Japan and the U.S. are becoming more interlocked. That means they're more likely to move in tandem, even more so than at the time of the 2008 financial crisis. Foreign investors now account for a very large proportion of players in the Tokyo market. When stocks plunge in the U.S., they unwind their positions in Japan to make up for the losses. Japan's stock market has been propelled by export-related issues under a weak yen. But if the Bank of Japan pushed ahead with rate hikes while the Federal Reserve embarks on rate cuts, the spread will narrow and the yen will swing higher. This will be a major drawback for export-related industries, which again would negatively affect the market.
Major indices and banks in Japan have seen substantial declines, largely due to the unwinding of the infamous carry trade. The carry trade involves borrowing in Japan at low interest rates and investing in higher-yielding U.S. assets. Recently, Japan raised its interest rates, making its bonds more attractive and causing the yen to appreciate. This has put immense pressure on those engaged in carry trades. The appreciation of the yen and the resulting declines in stock values have triggered margin calls and forced liquidations, further exacerbating market volatility. Japan's debt-to-GDP ratio is extremely high, limiting their ability to print more money to stabilize the market. Adding to the financial chaos are geopolitical tensions, including a looming threat of an attack on Israel.
Live look at Israel, where we're bracing for a possible retaliatory attack from Iran that U.S. officials fear could come as early as tonight or tomorrow. Our very own Trey Yingst is there. He's live on the ground with the latest. Trey.
Hey, Joey, good morning. Tension is rising across the Middle East as Israel braces for an attack from Iran. We know the U.S. Navy has already deployed 12 warships and the USS Theodore Roosevelt to the region. The Americans, along with other countries, are expected to help Israel shoot down incoming drones and missiles. New reports believe Iran will attack as soon as tonight and into tomorrow. The attack may also include incoming missile and rocket fire from Hezbollah in Lebanon.
These conflicts add layers of uncertainty to already volatile markets. Cryptocurrencies are not spared as Bitcoin has hit new lows, dropping by $1,000, and Ethereum is down 20%. Circuit breakers are being triggered due to the rapid market decline, indicating severe volatility. The U.S. national debt, now at a staggering $35 trillion, is also contributing to the instability. Major stocks like Nvidia, Apple, and Tesla are seeing substantial declines, with shares down 8%, 7%, and 5% respectively. Gary Clyde Huffbauer, a senior fellow at the Peterson Institute for International Economics, told Al Jazeera that the rise in unemployment indicates a potential recession in 2025. But has it come earlier? Japan's stock market is in chaos, experiencing its biggest decline in over 8 years. Despite this, we still see notable buying activity from whales and major institutions like MicroStrategy and Morgan Stanley. Experts expect aggressive Federal Reserve rate cuts and increased global liquidity, which could pave the way for recovery. The current market situation is undoubtedly precarious, but history has shown us that markets can recover. Stay informed, stay cautious, and as always, may the odds be in your favor. Don't forget to subscribe and hit the bell icon for more updates. Thank you for watching.